The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour for this Tuesday, January the 8th. There, got the date out, that's very nice. And thanks Tom and Brian for a great 2 hours. And let's just go right into the market because very interesting period this, what I'd say to subscribers. If this is a sell mode, even short term, a triple-digit down close is what will give us the clue. I wouldn't say pretty much anything else. I would say, but there's a good chance that this is just the digestive phase from that really strong leg up that we've had in all the markets. So now let's go to the, if you're looking at my charts here on Tiger TV, you will see that right there in the middle, that's the 120-minute chart of the Dow. Dow's down 61. You remember what I always discuss in the ChapmanWave, what we look for is a peak D, sometimes at least, sometimes even a little more, but at least a peak D if you're in a buy mode that switches to a cautionary signal at that fourth highest peak D. And there it is. Look, Dow Industrials, peak D, hits 13,445.61 in the 120-minute chart and reverses. Now, what I'd also mentioned to subscribers today, this is my opening calls, my very comprehensive look at all the markets, and I show charts of why I'm looking at, why I'm expecting certain things to happen, what to look for if they don't happen, etc. It's very comprehensive. So, and of course, we have my Traders Corner. In the Traders Corner, we actually have 2 short positions. One was just added this morning. In fact, we got it at 6 cents off the day's high, and it's down about $1.40 from that entry point. And another one is really a sector signal, and it's down a little bit, but it's actually holding quite well. I might just get out of that because it needs to really work. I don't believe in having things that don't work. And that was the way that I wanted to play this move. I had considered buying the DXD or the QID, and my thinking was that there is enough residual strength here that maybe it'll be, I might not have the opportunity to give because it's only once a day that I send out my newsletter, to be able to switch to the long side. That's my thinking. And that, yes, bonds could rally a little bit, and the dollar could bounce a tad, and the volatility index is certainly in an area where it's I'd say it's very easy for it to move up a point or so, having hit the 13s. And the volatility index is at 14.26 right now. But there are other things that are telling me that this is more a digestive week, and that's what I've been talking about in my here online in my Tiger Technicians Hour as well. I started talking about it last week on Friday, and I mentioned to subscribers that we want to be buying some stocks on a pullback, and so far our longs are still doing very well. 3 longs, and they're doing very nicely. One, in fact, made a recovery high this morning and still up very nicely. What I'm looking for is I want to buy certain stocks on a pullback. I want to short certain stocks on a rally. And yesterday I spoke about a stock. It happens to me periodically. I'm human like everybody else. I have this, this incredible resource of all these waveforms and techniques that I've developed. And I had a particular short on yesterday. I'll discuss it now because we don't have it. It got away from us, so it's not like CMV. No, that wasn't the one. Not Converse Technology. CVLT, that's what it was. Comvols. get it right, CVLT. I just want to explain something because it's really, we've got a lot of new listeners, a lot of people that are joining TFNN, and that's really exciting to me. So let me explain this. What I said is, this has been one of the best stocks on the Investors Business Daily. It was number 3. Commvault Systems Inc., management and information software company. And I really don't mind talking about things that I don't do right because you'll learn from them. It's really important to be able to assess. So in this particular stock, what I had written yesterday for subscribers early in the morning, because my newsletter goes out at about 8:35, a lot of charts go out before that. From 6:15, 6:30 in the morning, I start sending charts out. But the main one is the Traders Corner. And I had written to short the stock at $70.31, over $70.30. And yesterday it opened at 71.09. So I would have waited, and then we would have shorted at 71.31. It went to 72.56, and I had said the buy stop has to be 1 penny above 72.89. Why? Because if it goes 1 penny above, it could be recycling in the ChapmanWave to a new buy mode. But the fact that you see this indicator here, this tool, this is the daily chart, this is the weekly chart, this is the monthly chart. I'm looking at the daily. You see this beautiful up channel that it was in? Look what happened when it got to bumped up against that, what I call the inside track reversal zone. When it got there, every time it would reverse, but this time the MACD was turning down, and when it retested at 72.89 back on the 2nd of January, look where the stochastic and MACD were. They were failing. So it said to me that there could be a pullback, and the pullback could retest the low of the cup, which is 66.58. But if I didn't get it right, number one, then the risk to reward would be too high. And if I got it right, that's one thing. But if the market suddenly had a sharp up move, because it was responding nicely to the up moves, because money managers tend to go to Investors Business Daily for ideas, especially this is number 3 out of 50, out of the top 50, so they'd be inclined to buy it. So I suddenly had this fear, and why I should have had the fears, I don't understand why, because the stop would have been $1.55 or something like that. Let's call it $1.60 or $1.70. Well, on a $72 stock, that is, that's very small to be going short the best stock on the market. And the reason why I wanted it is that the weekly chart was showing the same thing, that when it was making these new highs, this cluster formation at the top at a potential peak F, in the weekly chart, ChapmanWave, you've got to watch out for that 6 highs peak F. The stochastic was failing. My only concern was that the monthly was so powerful that the tide hadn't yet really convincingly turned. So I pulled it, and I said, we'll watch it, and maybe we'll short it tomorrow. Well, we haven't shorted it. We chose another stock. Thank goodness that's working very, very well. But most importantly is that you need a technique that is able to identify the stock we shorted is a stock that we've shorted periodically, because I identified it as making a potential hat trick top. What is a hat trick top? It's where the daily is about to give a sell signal. Then the weekly confirms that sell signal, and usually it's peak D or E or maybe F. In this case, it would have been F in CVLT if this is going to make a hat trick top. And the weekly is possibly making a peak F, and it's only a peak D in the monthly with very strong technicals. So I would chose a stock that had made a peak F in the E or F in the monthly chart with failing technicals. The weekly had already given the sell signal, because the daily has to lead. The daily leads the weekly. The weekly then leads the monthly. Then the monthly confirms the tide has changed. And that's the way I'm looking at this market. I want to be shorting the stocks that are showing the weakest technicals in their monthly charts. I want to be going long stocks that have already had tremendous consolidations and were favorites and are now coming back slowly but surely into the favorite category. That's the way I want to look at this market. So I kind of avoided the ETF on the sector index, the indexes, the Dow, the Qs, etc. QID was another one I wanted to look at. But you know what? The Q right now is holding very nicely in this high-level consolidation with stochastic at 83%. The weekly needs a lot of work. The monthly is giving signals that it might be running out of upside energy, but the price is the arbiter of direction, and that price is still acting very well in the monthly chart after 4 days or something you're trading in January. So it's really early. So we have to go step by step. Let me give you the numbers. The Dow's down 79 at 13,304. The S&P is down 8.5 at 1453. The Comp Index is down 19 at 3,079. Gold is up 870 at 1655. Silver's up 16 at 30.24. Now the high grade copper is up. Is down again $1.30 at 3.66. Now that to me is very important because it's saying I don't yet have the strength to break into the $4 range. So this is something I'm going to watch real closely. Crude oil is down a tad, and bonds are up 30 seconds at 145.08. So I hope we have a chance to go through some of these other aspects. But what I also said was, in today, what I would like to do is to go through a couple of things that I was trying to do yesterday, but we had a lot of calls. So this is what I want to do. I wanted to show you something. The CH13. That is the corn. Corn chart is saying it's at a level right here that says it wants to try to rally. Oh, I've lost all the, I haven't got the notation. Let me go, I think the S is SH13. Yeah, SH13 is the soybeans. Soybeans March contract trading at 1389.5. Now, what's really important about, remember I spoke about the ChapmanWave, that you want to go to at least a D or an E, and then you got to be somewhat careful. Doesn't mean to say that it could, it's a major sell signal or anything. It just says be careful, because after the fourth peak, you've used up the torque of the stochastic. Look, you've used up the torque of the stochastic, and the MACD momentum is probably starting to run out a little bit, the fast-moving average. And that's exactly what's happened here in the weekly chart. Soy went from 111.38 low in the week of 25th of November, 2011. They were in peak A at 12.39, the week of the 6th of January of 2012. Peak B at 13.23 and 2/8. Week of the 16th of March. Then it goes to peak C at 1375 on the 6th of April. Pulls back, goes back to almost test the 200-period moving average. That's that golden line right there. Instead of it holds it beautifully, the stochastic bounces off the 20% level. The MACD turns back up. The fast-moving average, that's that little green line, is the fast-moving average of the MACD, moving average convergence, divergence. And then what happens is it goes to peak D, the week of the 20th of July, 2012, pulls back where? To the 9-period exponential moving average, that blue line, and spirals up to a peak E at 1728 and a quarter. And that's peak E, and then it plunges down, and now the 9-period moving average has become resistance, and it's making the H formation. That's really what I wanted to talk about. Patterns, how they repeat, and what we can do about them. I'll be right back. Basil Chapman, 877-927-6648. Love to take your calls.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour, 877-927-6648. Hey, I'm going to try this again. Overseas calls, 1-727-445-1044. I'd like to get some calls from overseas all over the show. We get emails from them. Okay, what I'm looking at here is the soybean March contract. I just want to show that it doesn't really matter what you're looking at. The waveform should work. Now, the object is to go from a trough, a most identifiable low bar trough, and to start counting the peaks to the upside. And you should get at least 4 if you go from a buy signal to a buy mode. When you get there, and there's a certain pattern that unfolds, there could be a reversal back down again. That reversal can take the form of an arch formation, upside down U or a horseshoe. So basically what happened is from the low bar of the 16th of November at 1356, what happens? You get peak A, peak B, peak C, then a doji candle. I love certain candles. It's just a few that I use all the time in the ChapmanWave. Right there on the 17th of December at 15:01 and a quarter. And it goes up in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21 bars. And it comes down in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bars. It comes down. But this is the interesting thing that I'd already drawn in a while back. The left side, right side price time match. Let me just type that in so you can see. Look, LS. Let me make it a little bigger. I think on my iPhone, which is quite a pretty big screen, it's still tiny. There you are. So that's the left side, and this is the right side. Within that, there's a technique that I use, which is called the ChapmanWave inside wedge. How do you identify that? Well, in my CD introducing the ChapmanWave methodology, I go through that in great detail. Most importantly, the developments over the years that I've done is to not just use the midpoint for a plumb line, that is the vertical line that gives the 90-degree move from the left to the right, because sometimes that's not going to work. And my theory is that most of the time prices go up in the same time as they come down. Look at this. If I go to soybeans, I'd actually like to have chosen one that most of you can have a chart of, and you can do it yourself. If I go to the peak E top right there from the low bar of the 24th of July in the daily chart to the peak E high of the 4th of September at 1718.5, and then I make that green. This is an easy piece of software that I'm able to do that, but you can do it any other way. And look what's happened. A beautiful left side, right side price time match to the plumb line at peak E, even though it made what I call a right arm extension. But actually, it's more like a rogue wave, because all the technicals were failing. If you were short, you were correct in being short. But very often, the bar that takes out the previous high, in this case, the high of the 4th, the bar on the 14th of September that went a little bit higher, just 1728.25, that's the bar that also fails and then plummets after that and then goes right back. And in this case, it makes the 9 period, the blue line, the resistance. Now look at this. If you go to the right side and you count, left side, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 17, 18, 19, 20, 21, 22, 34 up. It's about 34 up. And look what happened. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. And at 30, it fails to come down to the low of 1408, the low of the 24th of July. That's a successful test of the left side low. But that's the price move. So you see, very often prices go up and then come down in the same number of bars. In crash mode, i.e., that little section in the from the dreaded H that I'm showing you here, that H pattern, they went to a peak C minus where it fails. Well, look what happened. It plummeted down. That right there from 1480 down to 1369.5. That's crash material. That's when it takes it out in a short time. But even this arch made a beautiful up to the top, down to the bottom until it broke down. So remember that. It's really important to keep in mind that, yeah, crash modes are very important, just as rocket ships. That's what I've decided to call the upside-down crash. What is the opposite of a crash? It's a rocket ship. Why? It takes off with incredible torque and energy, just like a crash plummets, it like it opens down 30 points in the futures. That's crash material. I'm just talking about whatever time frame you're looking at. Even a 1-minute chart can crash. So that's important. And rocket ships to the upside are important. So we got that out of the way. Now we're going to go look at some other charts. We'll look at bonds, etc. 877-927-6648. Love to hear from you.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We're back. I had a question about a day or so ago about bonds, and specifically about munis, which I had spoken about, quite a while back, a few years ago, as probably offering at that time the safest haven. Question of now, and this question is on my mind as well, is it still a safe haven, really? Well, I'm looking at the MUB, which is the iShares S&P National Municipal Bond Fund. Let's get the big picture. The big picture had it starting off at 85.10 back in October of 2008. It went to peak A, peak B, peak C. But then I called it peak C1 and C2. 107.80 was the high in September of 2009. 107.29, a little lower, was the high in August of 2010. I called that in the ChapmanWave C1, C2. I put a down arrow. Actually, I haven't yet decided whether just to put a plus. It's confusing to put a down arrow because it's a lower high bar than before, so I'm going to put a plus and make the plus red. It's the only time I make the plus red. There you are. And then it pulls back, and it pulls back quite sharply percentage-wise, and it goes down to 95.85, closes around number 99 for the month. A beautiful candle starts at peak A, peak B, peak C, peak D, pulls back, walks the 9-period moving average. I don't know if I'm going to have to change that color or not. The reason why I didn't, because it shows up on the right as a very dark color. Anyway, the blue is what we've got. So blue is the 9-period exponential moving average. It goes to a peak E at 114.42 3 months ago. That was in November. Pulls back under the 9-period moving average, but right now it's above it, because I think that out of all the bond sectors, the munis tax-free, I'm not sure if this is tax-free. I'm going to try to find out if I can. But the munis in this particular area seem to be the ones that are holding up. And what I'd said before when I showed this chart, I think I showed it to subscribers, and I said, there could be a rectangle formation with a trading range forming, and maybe it doesn't make a new high, but it does trade in this for quite a number of months. It trades in this rectangle formation. Well, it's just gone from the low of the 18th of December at 109.17 to peak A, B, C, a very quick ABC, pulls back, goes to a real quick D, but that's much higher up, and that D's at 111.96, pulls back just under the 9-period moving average, the blue line, and look what's happening. It's at 111.98. The previous high was 111.96. 11.95 makes the little trough there to make it a peak. So this is starting leg E. Now, is this going to... I've done a whole bunch of studies on very quick peak A to B to C to D to E. But most of the time, you don't get a double of the price from peak C to the pullback to the D and E. And that's what this has done. Not a double, but actually it might be a double. So that says to me that my weekly chart now is going to be extremely important, because on Friday at 4 o'clock, if this is able to close anywhere in the 112.30 area or higher, I think I've identified a chunk of what I've been looking for a little while now, as to parameters, as to the which, the where, the what, the why. And I think that that's going to be very important in my assessment of how I look at munis, the MUB, that's Mother, Uganda, Basil, trading at 111.90, up 22 cents. That's the middle chart is the one I really want to focus on. That's the pattern that's really important. Having failed to hold above 113.99, the high of February of 2012, for a period of time, instead it just snuck up there once and then it's pulled back. This whole area is like a magnet and a repellent zone. How the daily is able to overcome the candle, the ugly candle at 112.44 on the 14th of December, really, really important. So I wanted to go to that area. I wanted to go to the volatility index once again to show, yeah, it can bounce, but even now it isn't above yesterday's high. It's at 14.22. Yesterday it hit 14.53. So day's young, anything can happen. But it's saying to me, based on the weekly chart, peak C minus, again peak C minus, low now is 1364. It hasn't taken out the 1330 low, but it's saying the magnet now is in this area. And that, to me, is not just fascinating, but it's really important, because that is either the springboard area or it's the magnet that attracts and won't repel it, won't, when the magnet gets turned around, it acts as a propellant. So this is going to be something we have to watch, especially in the monthly chart, where it's failed for months since it broke out above the 9-period moving average just once back in May of 2012. Remember, that was the steep decline we had in the markets. So that to me is important. The TLT is important. I think this is just a balance. 119.83. It's going to be real tough to break on the upside. In fact, I'm not going to say that I'm absolutely sure, but there are a number of signs that, first of all, the pattern that I was looking at, for those of you who are subscribers of mine, the stalk leg formation, we went underneath the body, unless it's setting up a new boundary for the body right now, that might be moot. That whole exercise might be moot, because we've gone below the 13,000, I think it was 343, 13,000. Yeah, 13,343 low of the 7th. So that says maybe there's not going to be a body. However, the oval pattern will be enforced if the Dow is able, either by the end of the day, to get to 13,348 and close somewhere there or higher, or it doesn't make a new low today and tomorrow we have a pretty darn good rally. Now, that's in my opening call. That's what I have. These 5 quintiles or whatever. So this is quadrants, penta something, whatever it is. We've got 5 sectors. So this is the 120-minute Dow. This is the VIX index, the volatility index, 120-minute. This is the short-term trading index developed by Richard Arms. It's moving quite high today. It's going to 187, but not in the 1.95 to 2.10. It starts to give me some kind of a signal. Hasn't got there yet. In this case, look at the way you've got the cup formation in the Dow. There's a handle forming. It's not strict in that it didn't even get to the top of the handle, to the 13,588 area. It went to 13,565 on the last move up. This handle has gone higher, so it's a little unusual, and the S&P is even more unusual, but it does have that pattern that says maybe an inverse head and shoulders. These are the patterns that you need to look at. Why? Because at any point in the next week, if there is a sudden spike to the upside and 13,590's resistance, 13,590's, that resistance is taken out, there are going to be mutual funds, they're going to be buyers forced into the market whether they like it or not. So that's very important. Now, that was the one question I had about the munis. And the munis say, yes, they could go higher, but I must give you a downside as well. Munis will break down. They don't even have to close there. If they dip from 111.86 right now, and they close underneath 110 in the next 2 weeks, there's an H pattern forming. That's negative. Rates then will be going higher right across the spectrum of bonds. That's my impression. So I needed to do that. Now, IYC is really important. What is the IYC? It is the iShares Dow Jones U.S. Consumer Cyclical Sector Trust. Whew. This is in a leg D up, a brand new buy mode that started back in... back in the October lows around about the 61 to 60 area. So the low itself was at 61.05. 60.88. So that is wrong. I can't call that an A. No. Just as well I double check that. This is leg C. Hoo-hoo. That's actually very positive. If this is leg C in the Consumer Cyclical Index, is that not amazing? Let me do that again. 61.05 was the low in August. 60.88, 27 cents or something, or 17 cents is the low in October. And the low bar cannot be the high bar in the ChapmanWave. So this is really leg C. I have to tell you something. And what does it involve? It involves, it's got Costco, it's got a whole bunch of very important of the big stores in there. Let's just do it right now. I actually have it all printed out because I can't find it right now. So the IYC components, you include in that, here we go. The components are Walmart. Let's just do it right now. Walmart, WMT. Off the top. Now, I think Walmart's making a hat-trick top. In fact, I'm pretty sure that it will not. No, I can't say for sure. I'd give it a good 65 to 70% chance that it's not going to break the 77.60 high for a while. That it's probably making a hat-trick top in the peak in the monthly, but the MACD hasn't crossed negative yet, and stochastic's at 78%, 76%. But the weekly is in the up channel. It's at the bottom of the up channel. It's underneath. So strong resistance, peak D, and the daily made a high back at a peak D at 77.60. So that says Walmart has a bit of a problem. It should not go to... My assessment is it probably will not go to a new recovery high. Comcast, SCA, I can never remember. Comcast, CMCSA. Somebody help me. Oh, there it is. Comcast. Oh, I haven't got it yet. I got it in the black charts. I used to have it in the black charts. CSA. Yeah, there it is. Notations. Yep, the notation is there in the monthly chart. So this is either F, peak F coming out, leg F, it hasn't made a peak yet, or a brand new buy mode in leg B in the monthly chart. And the MACD's very strong, stochastics at 95%. Very strong stock. Good. Walt Disney. I know I've done that in white. Done it a few times, in fact. Disney. Look at that. Beautiful cup formation. It's made a peak E/C in the monthly. MACD's good. Stochastics at 85%. I have to still say that that's good. I haven't got a signal yet. The weekly is the one I'm really close to. I don't know if I'm going to give it a sell signal, unless it slides underneath. It's at 50.83 right now. DIS Disney. And Disney, unless Disney takes out 48.80. 48.80 was the low of last week. If it takes it closes underneath that, Disney has probably made a hat-trick top. But up until now, I have to say that many charts are doing this. We just saw that in Commvault. They make this pattern, and then they try to retest the previous high. So 53.40, if it goes to 54.20 any time in January, that's going to be very positive for the monthly chart. And the daily chart has made this beautiful left side, right side price time match, almost a time match, to the high of somewhere in the 52 to 53 area. It only went to 52.33 on the 4th of January in the daily. Still looking quite good. So I don't yet have a signal there. And you can just go through these things. I mean, Amazon is at all-time highs, or it was yesterday. And today just missed that. And it's got an E/B in the daily. I have to call this, I am going to call it leg C for now in the weekly chart, unless something changes, and the monthly chart is in leg E. So you can see I don't have these sell signals. I have residual strength, internal strength in a lot of these stocks in the IYC. eBay, another one. I skipped the percentage order. eBay just made a new recovery high today at 54.20. Leg F/C in the monthly chart, and nothing technically wrong. I don't want to fight this. I don't want to fight this particular buy signal that's gone to a buy mode in most of my charts on the dailies, and the weeklies either are coming out with that H or the V-shaped pattern, the cup or the V-shaped pattern. That's going to be very important. Let's go to John in Philly. Hi, John. How are you?
Hello, I'm fine. Thanks for taking the call, sir.
It's absolutely my pleasure. You'd like to look at?
The NYSE Composite Index, Basil. Two things.
Yes.
I observed the NYSE comp has not exceeded the 2011 high. That was the high of either May or July.
Whereas many of the others have. Continue, yep.
I'm curious what the monthly and weekly ChapmanWave counts are, and if they suggest anything in particular.
Okay, it's a really great question. I spent some time on this. In fact, I spent some time on this over this past weekend, and it was very surprising to me when I looked at the New York Stock Exchange index. This is the NYA.X, that's how I get it. How well it's done, and yet in a sense it's lagging some of the other indices, and we'll talk about that, and I'll give you the wave count. I've actually got it right here. It's ready for printing if anyone wants to print it. We'll be back with John and Philly straight off these messages.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. Basil Chapman. Just a little touch of humor here. Some of you might recall back in 2007 and 8, I think I'd call this, Dinosaurus New Yorkus, and there I put a little feet on this with a long tail and body and long neck, and the head comes down. So anyway, it was just a little bit of fun. But that is an index that went from 10,387 down to 4181, a 59% decline. And look at this. It's gone to a peak D at 108% rally from the 4181 low back in March of 2009 to 8718. That was the 5th of, that was in May of 2011. Remember, we were just looking, and I was talking about bonds, that was an important period, May of 2011. Now look at the 614 on the 200 period exponential moving average. It goes to peak A. I call it gray A because it's underneath the previous high. Then it goes to B, still underneath 8718. And this month it's broken above that. It's gone to 8674. Oh, it hasn't. So it's still a gray A, a gray C. Now, so in other words, I have a rally going on in the New York Stock Exchange underneath the previous high, and if leg C goes right through 8718, I will immediately call it E/C, implying that it's picked up the old letter because it didn't break underneath the start at 4181. And it's got an alternate wave count. And if the MACD continues to rise and the stochastic, which is 89%, which will then, if it goes that high, will be at about 93%, that'll be really positive and say the next level of resistance will be the high of May of 2008 at 96.87. So I go step by step, as you know. Right now it's in a rally retracement failure mode. All that means is that it is rallying and has to overcome the previous high to really assert that it is in its own brand new buy mode. I must take this away because this is now moot. It doesn't mean anything. That's that arch there. And I've done it on the black background. I think it's a little easier to see. I'll also switch over to the white and see if that's good. But what I love about this is that the MACD is positive. The stochastic's at 89%, so the monthly is saying right at this particular moment, I can't be looking at the monthly until the month finishes. I have to be looking at the shorter term. So the weekly chart is broken out into it's actually E/B. Let me just change that, E/B. And so far, this is very, very good action. And stochastic's at 83%. So other than a shorter term pullback, right now I have to consider that even the New York Stock Exchange is acting very, very well. Does that answer your question? Whoops. John, you there? John?
Yes, thanks so much.
Okay, thank you very much for calling. So this will break down if the New York Stock Exchange in the next month goes underneath 82.19. And then it'll start to break down. I'd have to say, whoops, now you've got to be very careful. Then it's a rectangle formation that's falling. Folks, after me comes, this is the options hour. And the option hour with Victor Jones, he has so much information, just a fantastic show on options. Hey, but he's also got a guest. He's got Harrison Napper. He's got a guest on the show. Should be fabulous. I'm really looking forward to it. Now, let me just cover things real quickly here. I'm going right back to the Dow because the Dow is kind of my benchmark. If the Dow at the end of the day is able, let me just do this real quickly. INDU. If the Dow at the end of the day is able to get to the, it's at 13,319. If it can close anywhere in the 13,348 or higher area, I would say that's really good because it's tested the 9-period moving average today, and that's really good. That should be a bounce period. 90% stochastic. That's nice. I'll be back.